Hey, what's going on, everybody? It's Steve Zahnd from the Zahnd team. Gonna bring you a market update. So the month of August just finished. We're just a couple of days into September. So what's going on in the marketplace? I was super interested to see what happened here because this is the same month in 2017 where things started to flatten and then we started to rebound a little bit. In 2017, we had a peak in April. It declined until August, and then it was essentially flat for a year thereafter until we went up again. So is 2022 going to repeat 2017? Well, here you can find out what's happening. I'll just give you the super highlights of what you want to know. So as you can see here, the market is landing at $767,000 average sale price, which is exactly flat compared to month over month. So if that's all you wanted to know, I hope you enjoyed the market update. But if you want to know exactly what all went into the market, stick with me. I'm going to walk you through it. I'm going to do a little bit of analysis as well. Okay, so kicking off, let's currently look at what is on the marketplace. So currently we have 269 units available for purchase on the real estate market. Our 5-year average is 240. So we're slightly above our 5-year average. As you can see here, our mix of asset classes that we have single family detached coming in at exactly at our 5-year average at 142. Semis coming right there as well at 12 and 12. Towns are 52 currently, which is above our 5-year average, and condos are at 62, which is above our 5-year average as well. But it's pretty close to our 5-year averages, and things are kind of getting back to normal. It might not feel that way because we had the decline, but things are technically kind of coming back to normal right now. If we look a little bit deeper, what's going on here, compared to last check-in, we were at 292, so we actually dropped for the first time in a while some inventory. So we actually shed some inventory, which is the first time in a while because we were just accumulating a lot of inventory over the last couple of months. And this is the very first time in about 3 to 4 months that we've actually lost inventory, and I'll show you why. So we lost about 23 units, down about 8%. And so where we are from where we were last year, so last year, we had about 98 units of inventory on the market, which is represented right here, and now we have 269. So we do have a 174% increase from one of the craziest markets we've ever had with the lowest inventory we ever had. So that is to be expected now that things are adjusting and rebalancing. But versus our 5-year average, we only have about 11% more inventory than we do on our 5-year average. So that's kind of what's on the market. And the reason I start with this is so you can get an idea of what the supply is like on the market, because if supply is high and the demand is low, prices are going to drop. If supply is low and demand is high, prices are likely going to increase. So that's just to give you a little idea of what's going on the supply side. And how are we getting that supply? Well, as you can see here, we've added 6.5 homes to the market every single day in the month of August, which is actually 15% down from our 5-year average. And it's also, 1% down, 1.5% down from last year. So pretty similar, just the 15% drop is a little bit more substantial on the 5-year. But based on last year's numbers, we actually added just as much inventory as we did last year. So we're definitely coming off the highs of where we're adding 422 and 415 units to the market. This has been one of the lowest amounts of inventory we have added to the market since the very beginning of the year. So this is the lowest amount of inventory that has come to the market, but it's not the lowest that's happened in August. As you see, in 2016, we only added 184 units. Here we only added 197. Here we only added 204. So it isn't completely uncommon to have a low inflow in the month of August. So hopefully that's helpful for you to understand. How about on the outflow side? On the outflow side, yes, unit sales are down dramatically. 3.5 homes sold per day, which is one of the lowest that it has ever happened in August, by quite a considerable margin. So only selling 3.5 homes a day. So we're about a 42% drop where we were on our 5-year average, and we've sold about 35% less units than we did this time last year. So a lot less homes being sold, 110. How about on the failed side? Well, on the failed side, for the second straight month in a row, first time it's ever happened was last month, and now this is the second time it's happened in a row. We've actually had more failed sales than actual sales. So 121 units came off the market. Came off the market in form of failed, expired, suspended, canceled. Okay, so that's kind of gives you an idea of inflow, outflow. I'm going to put it all together in a final report for you at the end here. And let's look at some other key metrics that are making up the marketplace. So as you can see here, August actually had 28 days on average for an average days to sell. So days on market average is 28 days, which is up from our 5-year average. So this is one of the first times we're actually above our 5-year average this year. But it's not uncommon to be higher than this. We had months where we're at 33, 35. There's two 28s in there. So 28 days on average is kind of getting back to normal, which does seem crazy because the last couple of years, we're used to like immediate sales happening, right? Sold listing average sale price. So list price to sale price. So where does a house list and where does it sell? We came in at 93%, which is one of the lowest that we've ever come to. But after a market that we just had, the reason I'm believing that the 93%, which is one of the lowest list price to sale price ratios we ever had, happened is because sellers are finally coming to realization that the market has shifted, and instead of just canceling and relisting, relisting, they're starting to negotiate now, and those negotiations are bringing deals together at where the market is meeting. So the buyers and sellers are coming together, and that looks like it's about 7% underneath sale price, list price. So if you are a buyer and you're looking for a good deal, I went through the data and I noticed that there's actually some opportunities that sold for 80% list to sale price ratio, 75% list price to sale price ratio. So if you're looking for deals anywhere from 10 to 20% below ask, those are available on the market now. A very rare opportunity to get these opportunities, because if the market starts heating back up, it's going to be very likely that these 10 to 20% below below list price won't be available anymore. So if you are a buyer, it is a good time to buy. And I will show something on the Instagram stories as well. It does a comparison of if your home was worth 1.2 million in February, now it's worth 800,000 as a buyer, and comparing the interest rates, you actually have a lower monthly payment now than you would if you would have bought back in February when interest rates were super low but prices were sky high. Okay, so we'll get into that a little bit more later. Here we go is the average sale price for the month. So we came in at 767,000. So in the last video, you can watch it back. I was predicting that this is probably the month where we're going to see another little decline, and then we're going to go flat. Not only did we not have a decline, we actually had a bit of a bump, 0.01%. I know it's not a real bump or a real decline, but I was thinking more like 2%. We were going to see a 2% decline this month because, we were 11, 6, 8, and, things started looking like they were turning around, but it actually ended up flat. So the buyers and the sellers kind of met together and kept this market stable. And this is the first stable month we've had in a while. As you can see here in 2017, we went from 491 to 460. And we just had a much more accelerated drop off this year. We ended the peak to trough at 23%, and the peak to trough in 2017 was 18%. So I'm not saying that next month it won't go down even more, because there is a potential interest rate increase coming. However, if this holds true and it stabilizes here, the peak to trough is around 23%, and it took around the same amount of time to enter what's called a new normal market. So anytime there's major changes, it takes about 3 to 4 months for buyers and sellers to enter into the new normal. So you have your existing normal market, there's a disruptor in that marketplace. 3 to 4 months, you get your new marketplace. So I feel like we're kind of entering into that new normal marketplace here. I'd be really shocked if next month sales were down 10% from here. I really do feel like we've found a more stable level here where we're at, but time will tell. So that's where we're at here. As you can see, to graphically represent it, the massive bump that we had in January versus January, and now the market has kind of just found itself again, and really year over year, we are flat now. So the average sale price year over year is now flat with what it was in 2021. So it'll be interesting to see if we start dipping below what we ended the year at. It probably will happen. I do believe that closer to these months that the average sale price is going to be lower than the October average sale price and the December average sale price. We're probably going to be hovering around this 765 mark for a little bit, I believe. Time will tell. All right. Let's get into the year over year and month over month outflow report here. So this just represents what's happening here. So the green line represents the amount of units coming into the market. And as you can see, we had our first decline in inventory, and that's represented right here in the numbers. We had more outflow than we did have inflow, which brought inventory off of the marketplace, which is represented in our numbers here. But how it came off the market is much different than our typical nature of bringing homes off the market. So this red line here, which is outflow, is made up of these two lines, the orange and the blue. Orange represents sales. And as you can see in the beginning of the year, it was all sales, no failed to sell. And then as the year's gone on, it's now flipped where we met here back in June, where failed sales and actual sales met, creating this large outflow here. But now over the last 2 months, failed sales have actually been the majority contributor of the total outflow. So this is just what I considered fake sellers, so to speak, the ones that were kind of still living in February of 2022 and really still hoping for those opportunities. I really do feel like the market has shed those now. We do have less inventory on the market. I do feel like the sellers we have on the market are here to sell, and that our fail to sell number is likely going to drop. In the next couple of months. In the next couple of months, we're going to see a decline, I believe, in fail to sales, and we're going to see an increase in actual sales again, where it's just going to stabilize, and we're going to actually have more sales than fail to sales. So that's my prediction. And as you can see here, our inventory has now kind of caught up and replenished. And in September, as you can see here, we had a big peak in August. So the dark gray line is 5-year average inventory, and the light gray line is current inventory. So we're kind of getting back to where we were. So we had low inventory, peaked up, maxed out here, and now it's trying to come down a bit. So I'm going to be interested to see what happens here on. So if you are a seller in the marketplace, you just do have to position yourself properly. And obviously with the advice from the Zahnd team, we can help you get the maximum value for your house without kind of being stuck in this limbo area. You don't want to be in the limbo. You want to make sure you have a great attractive product on the market, because the best houses still do sell, and they sell fast. I can show you that there's data that has 105, 107% list price to sale price ratio, because they position themselves properly in a scarce market where there's scarcity of buyers. There are still buyers that are looking for great products. So if you put the best product on the market, and then the rest is essentially noise, you're going to stick a little sore thumb, and we're going to be able to move you at the right price. That's what today's market's going to offer you, the maximum price that today's market's going to offer you. So that's the key, is to maximize your value in these markets and not be caught with the rest that are kind of just hanging out and losing value, because every day you're on the market that's over the average days on market is perceived value that you're going to lose, because the buyers think there's something wrong with your property. So you got to be careful about that. Hopefully this has been helpful for you guys. I'm going to shoot a couple other videos to kind of get into what it looks like here. I'll share on the email blast. We'll share that calculator that shows you, if you bought in February, and if you buy now with the increased interest rates, that your mortgage payments are actually still lower buying today than you would have bought in February. So hopefully this update was helpful. I guess I should finish. I apologize. So here we are with the year-to-date inflow. So 2,600 units came to the market, which is about 13% more than our 5-year average and 7% more than last year. So we're getting healthy inflow still, even though we've had less inflow in the last couple of months. Still solid inflow. The sales, though, are down considerably from last year. Last year was one of the craziest markets. So 513 units less than last year. So 25% down in sales. But over a 5-year average, it's not that far off of a typical market. Failed. Obviously, this is the biggest culprit of our outflow here. This is the biggest disruptive number here. 74% increase and 110% increase respectively for outflow. So that's just been off the charts. But we've definitely gained much needed inventory back to the market. So we actually gained 411 units from when we started, which is we have 203 more and then 96 more. So we added a lot more inventory to the market, and that was much needed. So if we're looking at how many pieces of inventory you have on the market today, we have 269 homes for sale today. The average amount of homes that are coming to market per day is 6.5. So in the next 30 days, we're going to add 194 homes to the market. So if we take the 269 plus the 194, that's going to give the marketplace 463 homes to buy. So considering that there's 463 homes to buy, if our outflow rate is 7.5, which includes sold and failed, 7.5 homes are going to leave the market a day, which will bring our remaining inventory actually even further down to 239. That's what it looks like it's going to do. We'll see if that actually holds true. But if that's the case, in 30 days, if we only have 239 homes to sell, and then our average outflow pace is 6.5 homes a day, sorry, 7.5 homes a day, all the inventory will be gone in 2 months. Here's the 2.01. And when we're closer to 2 to 3 months of inventory, we're in a balanced market. So consider technically right now, we are in a balanced market, and that kind of shows in the average sale price as we do have a flat 0% growth or decline. So hopefully that was helpful for you. Hopefully you found some value. Feel free to comment or reach out if you have any questions. Thanks so much.